penny stocks have a reputation to be speculative investments, and the trade trends of penny stocks are volatile. Investors make a sizable amount of investments in penny stocks based on speculations, and hope that the volatility of the stock trend shifts in their favor. Our purpose on Stockstelegraph channel is to guide and educate investors in making informed decisions in investments, by providing them basic information to expert insights from related research. The key focus of today's video is how to identify and reduce volatility in penny stocks, so that you don't burn your money. Penny stock investors burn a lot of their investment due to the volatility of penny stock. They also lose a lot of money due to poor decision-making behind the investment. Now this is because penny stocks are often subjected to pump and dump plays by investors. In this video, we will be showing you the right metrics, fundamentals, and developments in a penny stock that will potentially help you gain the same profitable investments as you would from investing in Fortune 500 companies. Before heading towards our list of top 3 under $1 stocks of 2021, be sure to subscribe to our channel and press the bell icon, so you can get all the information timely. The first stock in the list of penny stocks under $1 is Sundial Growers with the ticker SNDL. Sundial is traded under the NASDAQ exchange. Sundial Growers is known for producing, marketing, and selling cannabis that is specifically targeted for adult usage, and is primarily inhalable products. We chose Sundial because the growing trend in the cannabis market strongly indicates growth. Despite the pandemic shutdowns in 2020, SNDL shares have nearly doubled in value. According to market research by the Brightfield Group, the hemp CBD market will reach $16 billion by 2025. The U.S. nutraceutical industry is expected to grow roughly by $100 billion in 2022, which is good news for Sundial's growth and expansion. Furthermore, the U.S. cannabis market has yet to reach its full potential, because federal regulations have yet to pass a bill to legalize marijuana in the USA. When that happens, it will be open sesame for the cannabis industry to grow. The Canadian and European cannabis industry is expected to enter the US market if this bill passes. SNDL already has a massive average volume of around 190 million for the past 90 days, which makes it super liquid. Moreover, SNDL has expanded through acquisition to become the largest retail network in Canada. Despite not having any pending acquisitions in the US market, and having a relatively smaller market cap, the year-to-date performance of SNDL is 68%, which outperforms that of major cannabis companies like Canopy Growth and the Kronos Group by a huge margin. What makes Sundial a worthy cannabis stock is the comparatively standout performance of the company in the market, and the promising growth trend of the overall cannabis industry. If you want to get more information on cannabis stocks, click the link on the top right panel to check out our latest video on how to invest in cannabis stocks in 2021. The second stock in the list of penny stocks under $1 is Zomedica Corporation, which trades under the ticker ZOM on NYSE. Zomedica is an American-based veterinary health company that focuses on creating products for cats and dogs. We consider ZOM to be an underdog penny stock. In the first quarter of 2021, and the last quarter of 2020, the company reported net losses of 5 cents and 4 cents per share respectively. The ZOM stock's performance in the past half year is minus 34.34%, but the yearly performance, however, is a triple-digit growth of 172.25%. It is important to note that the company was in the development stage in 2020, and was only able to start generating revenue from the last 15 days of the quarter ending in March 2021. We have placed ZOM stock in our list because although it had a muddy start into 2021, there are still very promising growth potentials ahead for the company and its market. A report published in the Grand View Research states that the global veterinary medicine market is expected to expand from 2021 to 2028 by a compound annual growth rate of 7.4%. The research points out the growing chronic and zoonotic diseases as one of the main reasons for market growth. We previously covered an article on our Stockstelegraph website, where we showed that according to American Pet Products Association, the overall U.S. pet industry spending is increasing. 67% of the households in the U.S. kept at least a single pet and spent an aggregate of around $99 billion on their pets in 2020. This data shows that Zomedica is well positioned for commercially releasing its new proprietary diagnostic system in the market. The diagnostic system is called TrueFormer, which detects thyroid disorders in cats and dogs. The company will be profiting from the sales of this untapped and growing veterinarian diagnosis market, thanks to its uniquely differentiated diagnostic system. Furthermore, the company has reported a $276.6 million cash liquidity, which is a significant jump compared to $1.5 million last year. The company is also strategizing an acquisition and licensing effort by hiring a new VP for business development. This shows that the company is well positioning itself to grow its sales force and drive up its sales through the right tactics. Next on our list is a Robinhood-based penny stock known as Inuvo Inc. Inuvo trades under the ticker INUV. Inuvo is an advertising agency, which is relying on state-of-the-art AI technology to enhance its commercialization solutions. Inuvo's latest product has the potential to be revolutionary in the upcoming digital marketing trends. Its patent AI-driven commerce solution is known as Intent Key. In fact, Intent Key is the key to the company's success as a penny stock and beyond. What is more interesting is that the company has partnered with Google and subsidiary Vertro, which will allow it to reach the online audience for generating high-quality leads. It will do so through the use of Google's web search and AdSense for search services. The company is showing promising metrics and growth in its fundamentals. The Inuvo stock is now up by 100% in 2021, and Inuvo has year-over-year revenue growth of 63% for the second quarter of 2021. The market cap of the company is $94.9 million, and has an adequate price-to-sale ratio of 2.35. Moreover, the $17.8 million cash on hand of the firm will further aid Inuvo in capturing the market. The analyst score received by the company is a solid 2 out of 5, where 1 is equal to buy and 5 is equal to sell. In 2022 it is expected that the third-party cookie will disappear from the Internet. This will allow the company to be in an extremely advantageous position in the online lead generation market. Software services and solutions like Intent Key are defining tools for the digital market era, in which we are immersing. This makes Inuvo a phenomenal under $1 penny stock. It is important to note that all of the penny stocks we mentioned above are either under NYSE or NASDAQ. Penny stocks are also traded in the OTC and gray market. However, many traders and analysts prefer to invest in penny stocks that are traded under these exchanges specifically. This is because the regulations and requirements of the mentioned stock exchanges are more stringent towards stock and company information as compared to OTC, pink sheet, or gray market. Since penny stocks are already volatile with less information, it is believed that choosing a specific stock exchange can reduce volatility caused by a lack of information. This is it for our list of top 3 under $1 penny stocks of 2021. Let us know what you think by leaving a comment below. We are excited to hear from you. We have also covered the top 5 penny stocks under $5 for 2021 in one of our previous videos. Click on the panel after the video ends to watch it. The Stockstelegraph team works round the clock researching all the news that matters to you. We have more important tips like these on our YouTube channel, so be sure to subscribe.